Hello, and welcome to another update video on gold. I want to cover here the short-term chart for gold only in this video. In case you missed the weekend update, check it out. It's available on this channel. And in this video, I covered the larger time frame, the daily chart. Can always be helpful to, from time to time, do this and to get a good idea of what the larger patterns are doing, because context is everything in Elliott Wave. So, but therefore in this video we don't need to repeat that. We can just jump right into the shorter time frame. And finally, after more than a week of waiting, we finally get this B wave that we were watching for. I already got a bit concerned, but we now have the bounce we wanted to see. This starts to look like a somewhat healthy B wave. There are still the two scenarios I'm tracking here. Two different wave 4 wave degrees, either the white scenario, smaller wave degree, orange count, larger wave degree. In both scenarios, I have no evidence at the moment that the overall correction is complete. That would require a 5 wave move up. At the moment, even with all these ideal microstructures I've added to the chart, this would only lead to a 3 wave move up. But it's good to see that we get this move to the upside that we wanted to see, and I expect higher prices this week, unless the market gives us a 5 wave decline and we break back below this signal line. Ideally, the market now stays above this level here around $4,055. This is the previous swing high, so 4,058 is the previous swing high from Friday the 31st. We consolidated below this level now since end of October. Well, now we broke out actually. And we're now in the resistance area. And please note that B waves technically can even overshoot. Now, I don't necessarily expect that, but you have to always be ready for it when we're dealing with a B wave. It's just impossible to predict. Now, I'm tracking this as an ABC structure to the upside. It's important whenever we are dealing with a corrective pullback, like in this wave 4, whether it's the white count or the orange one, it's important that we get a decent B wave in between so that we could get a good idea of where we are in this correction, because the 3 wave structure of a correction helps us determine targets and so on. So for example, once we have a B wave top in place, we can determine the target for the C wave to the downside, whether it's in the orange or the white scenario. It's good to see that the market started the correction, landed in Fibonacci support, and bounced from it. So it did everything it needed to do, basically. Naturally, tracking microstructures in a B wave within a wave 4 is not easy, and the micro or nano structures changed a few times. But overall, it's important to understand that people shouldn't trade the labels. They should trade the levels. Now, again, I'm not telling you to trade anything here. I'm just sharing with you a structure. But Elliott Wave traders should, if they do it correctly, they should trade levels, not labels. Because the labels can change. The labels are only the tools to get to the levels. So at the moment, we've moved from support into resistance. That's exactly what we were watching for. So we're now in resistance. And as you can see, it looks like we might still stretch a little bit higher in this C wave this week. Next levels of resistance to be aware of, 4,145. That's the next Fibonacci resistance level. Is quite important. This is again, it's a Fibonacci resistance level. So it is Fibonacci resistance, the 50% retracement, not structural resistance. The next structural resistance level is here, around $4,170. And you can see there is still some room for further for further upside in the very short term. A little bit more room for further upside, not necessarily leading to a break of resistance, but we'll see. I mean, for now, the focus is on higher until we break back below the green line. That could likely trigger a sell-off in the C wave, especially if it's a 5 wave decline. So that should give you all the parameters for this week. You have support, you have the next resistance levels, structural resistance as well. Good to see that bounce. Silver should also move a little higher. So that's the update on gold. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the membership and our stocks membership. You can also get additional updates on gold and silver every single day as a bonus, but the focus is on the S&P 500, the Nasdaq, and so on. And if you're wondering where to trade gold, we've partnered with XTB. They are a fully regulated global broker. They operate in most regions around the world. They offer a dashboard here where you can do chart analysis. Yeah, you have a full chart analysis tool. You can also trade gold. They offer gold CFDs, which closely mirror the GC futures chart that I'm using here in my analysis. So you can trade the same market moves without needing a separate futures account. All you need to do is to look for gold. There are also some gold miners here, for example. But yeah, you can select gold CFDs. The only exception right now is that it's not available for clients based in the US, but for most of our audience worldwide, it's accessible. If you'd like to support this channel and the MCO project and the analysis we give you here every single day, then yeah, you might want to sign up through that link in the comment section. Then you are directly supporting what we're building here at MCO Global. I mean, maybe you are interested in finding a new broker anyway, then that might be a good fit. Check it out. Hope you enjoyed the update. Thanks so much. Bye-bye.